The Daily Insight. I'm joined by Bati and Mufara. Good morning, guys.
Morning, Epi. What's up?
Nothing is up. Not so sure how you answer that, but nothing is up. Anyway, straight to the news. Big news yesterday. Obviously, it's just the inflation figures, which came in at 175.66%. The Herald completely ignores this and goes with the swearing in of the ZAC commissioners, saying that the commission is already investigating 200 cases of corruption-related crimes. The business section of the paper, again, doesn't have inflation. It goes with paynet, readmits 3 banks as alternative is tested. Newsday focuses on the non-meeting between government and its civil servants, which was slated for yesterday. Daily News says Jamisa is concerned about the whereabouts of VP Chiwenga. We're all concerned about the whereabouts of VP Chiwenga. But it's inflation that's worrying at 175.66%. Expected after the May 20 liberalization, some liberalization of the forex market, and the subsequent increase in the fuel price.
Yeah, for me, the key highlight there, Epi, is the 251% food inflation. Of course, I mean, it's food constitutes about 30% of the
Of the basket, yeah.
The basket. So really, for me, it's a major cause of concern, given, of course, the disposable income levels, and also bearing in mind that civil servants, for example, are still earning very low salaries. So really, for me, it's going to be a demand issue. Are we going to see anyone buying food from the food retailers? I mean, with these prices going up, and
But we'll buy. I mean, we can't do without food.
But you have to adjust your budget by the end of the day.
You adjust
because,
to certain things.
It becomes quite expensive.
I mean, where you used to buy Jacobs, you've got to switch to Nescafe. You just have to switch down on most things. So where you used to use Baby Soft, you go back to Arts tissue line. What's the name?
I say buy the tissue
Softex,
that's on
yeah.
the street.
On the
cheapest
streets.
alternative.
Yeah, so for me, looking at companies on the ZSC, your food retailers, I mean, it's a major cause of concern. What's going to happen to volumes? Yes, they can push through price increase, but there is a limit by the end of the day.
Yeah, there is a limit.
In terms of the volumes that should be actually pushed through. And also, what we've seen historically with these numbers is that, for example, on the ZSC, it responds more to inflation numbers
than anything,
as opposed to even exchange rates.
Yeah.
So really, we're going to see, institutions
going up now.
looking to invest
To hedge against inflation.
Yes,
So the month-on-month figures which they're telling us we should look at are at 39.26%, and then food month-on-month is at 55%. So if you use the benchmark that 50% is the hyperinflation mark, then that means food, like you're saying, is worrying. It's already in hyperinflation, but month-on-month at 39.26. This is for only the May 20 policy change. It doesn't include the June 24 policy shift. So we will likely see inflation going up significantly for July and going up for August as well, once you factor in the data, and then there's the other fuel increase, and then soon to come there's a tariff increase.
So inflation is going to continue to run away. I mean, the Minister of Finance did say that come July, prices are going to start to go down, but I think we are going to be seeing, a difference. They're going to be going up. Tariff increases, diesel prices going up. It's going to balloon. How do we arrest the inflation figures? Because at the moment it's a scary figure. If civil servants are only getting a 40% sort of like a voucher to buy their food, they'll still be 210% below that mark. It's worrying.
So it comes back to the exchange rate by the end of the day, because I mean, pricing really is a hedge against benchmark against the parallel market rates.
Yeah, but the rates
so for as long as there's no FX in the system,
steady.
Yes, the rates have stabilized. I think the last 10 days or so, there's not been that much change. So I'm not sure.
But year on year, comparing with the last year, I mean, there's been a significant shift. So really, probably that's the major driver there. Probably month on month is going to slow down if rates normalize and become, but year on year comparing to last year.
Last year will be higher.